Stocks surging into the close. Best day for the Dow since July. Let's go back to Mike Santoli taking a look at the financial health of consumers now that stimulus talks are up in the air. Mike, question of the day.
It certainly is, Sarah. And it's tenuous based on how you look at it. First, let's take a look at how dependent households have been on government transfer payments, all kinds of income support programs. And you see it's gone from this long-term average in the high teens, shot up toward 35% at the very peak of the shutdown back a few months ago. And then as of August, the latest reading we have, it's down under 25%, but still very elevated in terms of how much of personal disposable income is now represented by those government transfer payments. So this would imply if they start to continue to go away, unemployment checks, things like that, then you're going to have a big gap in the household budget. But look at this chart, which suggests that there has been, in aggregate, a cushion built up. Morgan Stanley calculates this excess savings piece. So this is kind of the pre-COVID run rate of personal savings. And you see it shot up. Why did it shoot up? We got $1,200 checks going to a lot of people who didn't necessarily need or spend it. You have higher income households not going on vacation or going out, and they've kind of preserved their spending power. So this isn't to minimize how many consumers are strapped right now and how many are really left in the lurch with the expiration of a lot of these benefits. But in terms of how the market thinks about these things in the aggregate, the spending power, the argument is you can still run this off for a while without it necessarily getting to a critical point. And maybe that's why there's some patience being displayed by the markets in terms of when we get a further round of fiscal stimulus and how much will be needed at that time, guys.
Yeah, to me, it says that the stimulus that they injected the first time was so strong and so powerful and made such a big impact on people's finances, on their incomes, and on their savings, that the fiscal cliff everyone was worried about just didn't come as sharply because they've still built up that reserves, Mike. It does not suggest that it won't come, though.
No,
that
absolutely.
Money will wear off.
And the estimates are that it could be this month or next month in terms of when you really start to have a shortfall there. So it's, again, the clock is ticking. It's not as if we can be complacent about it, but it does help explain why you have had this lag effect of all that stimulus that's still working through.
Okay, Mike, thanks so much.
Shepard Smith here. Thanks for watching CNBC on YouTube.